If you're looking for an investment strategy that can help you achieve long-term financial success, consider studying the strategies and philosophies of the top investors of all time. The best investors are able to consistently beat the market by recognizing companies that are worth more than their current value. They rely on fundamental data points like balance sheets and margins of safety to identify these potential stocks. 1. George Soros. George Soros has been a legend in the world of investing since he started managing money. He is known for his ability to spot trends in the market and make smart bets. Despite his success, he has also suffered from periods of underperformance. This is because he is a contrarian investor who makes bold bets against the mainstream. He has used his wealth to fund groups promoting social justice and democracy around the world. His Open Society foundations have helped to support organizations like Global Witness and the International Crisis Group. He also contributes millions of dollars to political campaigns. 2. John Templeton. One of the greatest investors of all time, Sir John Templeton, was a pioneer of value investing. He was also a true contrarian and was investing globally before anybody else dared. He also had a keen curiosity about the world around him. He spent a lot of his time traveling and visiting 35 different countries. The investing strategy he used was to buy companies at a discounted price and hold them for the long term. He also made use of his judgment to determine when to sell. 3. Peter Lynch. Peter Lynch is a legendary investor who managed the Fidelity Magellan Fund from 1977 to 1990. During his 13-year tenure, Lynch delivered an average annual return of 29% for investors and grew the fund's assets from $18 million to $14 billion. He became famous for his investing philosophies, which emphasized that stocks should be chosen based on well-grounded expectations about the firm's growth prospects. This strategy entails finding companies with a lot of potential for growth and buying their shares at reasonable prices. His investments are based on a story approach that involves researching a company's history, products, and competitive environment. He believes that this will help him determine whether a stock is worth its price. Additionally, Lynch emphasizes the importance of investing in small or emerging companies because they have higher growth potential than more mature firms. 4. Jim Simons. Simons founded Renaissance Technologies, a hedge fund that uses mathematical models to trade in markets around the world. His firm gathered vast amounts of historical data from the World Bank, commodity exchanges, and currency prices and fed them into computers to analyze historic movements and patterns. He built a computer model that could identify and profit from patterns in the market, which can be repeated over time. These strategies are called systematic trading. Jim Simons is the founder of one of the most successful hedge funds in history, Renaissance Technologies. He has given over $2.7 billion to philanthropic causes, including education and health research. He pioneered a new way to trade using algorithmic investing methods, which avoid most of the common trading biases. He staffed the company with mathematicians and other experts who used data to predict the market and take advantage of its smallest and shortest fluctuations in prices. 5. Warren Buffett. Buffett is known as the Oracle of Omaha, and his investing style of discipline, patience, and value has consistently outperformed the market. He is also known for his frugality. Buffett has been a buy-and-hold investor, hanging on to shares for years and even decades. But he has recently experienced some turnover, selling shares in companies that he previously held. For instance, Berkshire bought a significant stake in Taiwan Semiconductor, TSM, in Q1 2022, but then dumped the position later that year. It also sold its long-held positions in AbbVie ABBV, Bristol Myers Squibb, BMY, and Royalty Pharma, RPRX. 6. Jim Rogers. When it comes to investing, there are a few elite few who are consistently at the top. These individuals have mastered the art of spotting value and creating their own investment strategies. Jim Rogers is a renowned investor who has accumulated a fortune of around $300 million. He is also an author and financial commentator. He is the co-founder of the Quantum Fund with George Soros. The fund grew by 4,200% under his management. In addition to his investments, Rogers is also a famous adventurer and motorcycle rider. He traveled on a motorcycle for over 100,000 miles across 6 continents, which earned him a Guinness World Record. 7. Mark Faber. In this episode, Impact Wealth speaks with the legendary investor Mark Faber about his thoughts on the state of the market and how investors can navigate uncertain times. He also discusses his advice for parking capital during uncertain times, buying cryptocurrency, and which sectors will have the best ROI for investors. He's known for his contrarian approach to investing, and he has been able to make huge profits through his unique strategy. He's a regular contributor to numerous financial publications around the world, and he's also a popular speaker at investment seminars. He began his career in 1970 and worked for White Weld and Company in New York, Zurich, and Hong Kong. He later became the managing director of Drexel Burnham Lambert in Hong Kong, and he established his own business in 1990. 8. Jim Cramer. Jim Cramer is a stock market wizard, best known for his savvy investment advice show on CNBC. He also runs an investing club aimed at helping all investors build long-term wealth in the stock market. Cramer is the king of the value investing game, employing Benjamin Graham's approach to buying quality companies at low prices and holding them for long periods of time. He has a reported net worth of $150 million, according to Celebrity Net Worth. He was a notable success as a hedge fund manager, generating a compound rate of return of 24% after fees for 15 years. His stock picks tended to underperform the market, however. In addition to his television career, he is also an author and co-founder of the website The Street. 9. Ray Dalio. Dalio is the founder of the world's largest hedge fund, Bridgewater Associates. He started the firm in 1975 from his apartment and has managed to make investors more than $150 billion. One of the key principles that made Dalio a famous investor is his focus on macroeconomic trends and economic research. He studies the economy to identify opportunities and risks that can lead to big returns. He also emphasizes the importance of diversification, which he argues can help you manage risk. He recommends combining at least 15 uncorrelated assets to reduce your risk-to-return ratio. 10. George Soros. George Soros is a Hungarian-American investor, hedge fund manager, and short seller who has made billions of dollars through his investment strategies. He is a proponent of reflexivity, an investing philosophy that focuses on taking advantage of market inefficiencies. He also believes that investors should diversify their assets across various sectors and asset classes. Soros' investments have earned him a number of nicknames, including the man who broke the Bank of England and the King of Currencies. Soros has been known to make controversial investments that are contrary to popular opinion. He often takes on bets that are too risky for most hedge funds, and he has a reputation for making large profits when his investments pay off. He has also been accused of trying to manipulate the world economy for political purposes.